Hello children, in today's video we will see fixed capital account and fluctuating capital account. Now in partnership, the partners' capital accounts can be prepared in two methods. The first method is fixed capital account and the second method is fluctuating capital account. Now first I will explain the fluctuating capital account method. Okay? As the name suggests, in a fluctuating capital account, the opening balance and the closing balance will change every year. Okay? Whereas in a fixed capital account, the opening balance and the closing balance will remain the same, except there are certain exceptional cases. So, under fluctuating capital method, let us see the format. This is partners' capital account. Now this is the partner's capital account when there is only one partner. But we have more than one partner, isn't it? So we will be drawing two amount columns or as many amount columns as per the number of partners. So suppose you have A and B, two partners. Then we will have two amount columns. This is for A and this is for B. This is for A, this is for B. This is the journal folio. Okay? Understood? Or if you didn't understand, say for example, if this is the partner's capital account, according to the number of partners, we should have those many amount columns. And this is journal folio. If you have three partners, then of course, then you have to prepare three amount columns. Let us say A, B and C. A, B, C, A, B, C. The particulars columns will be same, debit and credit. So the particulars column will be common for all the three partners. Only the amount columns we have to show the different amounts as per the different partners. Okay? In this format we are seeing only one amount column, but in practice, based on the number of partners, the amount columns will increase. Now, partners capital account, you should already have an idea. It appears in the liability side of the balance sheet. Last year sole proprietorships capital. Where does capital appear? Liability side. So it has a credit balance. So the opening balance brought down will be on the credit side. Okay? But in some cases, if the partner's capital account is appearing on the asset side of the balance sheet, then the opening balance will come in the debit side. So these two cases are either or. Both will not come in the same account. Either it will be a credit side balance or it will be a debit side balance. 99% of the times it will be a credit side balance. Okay. Next, if the partner is bringing in additional capital, any freshly introduced capital, that will also appear on the credit side. You have to write bank and the additional capital will appear in the credit side. Now, any kind of salaries, interest on capital, remuneration, commission, all these kinds of incomes, which is an income to the partner, will appear on the credit side of the partner's capital account. So, salary, remuneration, commission, which is payable to the partner, and interest on capital will appear on the credit side of partner's capital account. Now, on the debit side, you have drawings. In my last video, I told drawings and capital balance will not appear in profit and loss appropriation account. But drawings and capital balance and additionally introduced capital will appear in capital accounts of the balance of the partners. So the drawings account is appearing. Next, it is interest on drawings. Interest on drawings will also appear on the debit side. Now, how to remember? You all know P&L appropriation account, isn't it? By now, you all should know the format. So, P&L appropriation account. So, in a profit and loss appropriation account, you have salary, commission, remuneration to the partners, interest on capital to the partner appearing on the debit side. That will appear on the credit side of partner's capital account. And interest on drawings appearing on the credit side, that will come in debit side of partner's capital account. Apart from that, you have opening capital balance and additional capital introduced and drawings. These three items do not appear in P&L appropriation account. So this is how you have to remember. Now, if you get profit in profit and loss appropriation account, that profit is distributed among the partners on the debit side, that will be shown here on the credit side. Profit and loss appropriation account you will write, and the amount for A you will write in A's column, amount for B you will write in B's column. If you have loss, then the loss will be shown here on the debit side. Okay, students? So, in a profit and loss appropriation account, if you have profit distributed among three partners, that profit will be shown on the credit side of partner's capital account. If you have loss distributed among the partners, that loss will be transferred to the debit side of partner's capital account. This is how you have to remember. In practice, actually, capital account is prepared first and only then profit and loss appropriation account is prepared. But when we solve sums, we will prepare profit and loss appropriation account first and then we will go to capital account. This is because we have to find out the profit or the loss, and that balance should also be transferred to partner's capital account. But in practice, it is the capital account which is prepared first. Okay? So, once you have filled all the details, find the balance. 99% of the times you have to get the balancing figure on the debit side, which means your credit side will be more. Write the same total on the debit side and find the difference amount and write it here. Just write balance carried down. That's it. But if your debit side is more, then you have to write it here. Then the balancing figure will come. As I said in the beginning, this is either or. This is also either or. Both will not come in the same sum. So in a partner's capital account, if it is fluctuating in nature, you have opening capital balance, fresh capital brought in by way of bank or cash, partner's salary, partner's interest on capital, partner's commission or any other income which the partner should receive. Then you have profit and loss appropriation account, okay, that amount. Then drawings will come here, interest on drawings will come in the debit side, and sometimes, and then we have to balance. The balance will come in the debit side mostly. Once in a while the balance may come in the credit side. Now apart from this, you have something called partner's interest on loan, isn't it? Now where will interest on loan appear? Interest on loan, children, will not appear in partner's capital account. For interest on loan, we will prepare partner's loan account, and interest on loan will be transferred to partner's loan account. Keep that in mind. Now partner's capital account is over. This is fluctuating method. Now under fixed capital method, we will be preparing two accounts. One is partner's capital account and the other one is partner's current account. In partner's capital account, the opening balance will come in the credit side. If the partner is introducing any additional capital, that will come in the credit side. If the partner is making any permanent withdrawal, I am stressing on the word permanent because it is not drawings. Drawings will appear here under current account. So in the question, if it is mentioned that it is permanent withdrawal, only then we will show it here on the debit side of partners capital account, and the closing balance will appear on the debit side. Now all the other entries which we passed in a fixed capital, in a fluctuating capital account, all the others, salary, interest on capital, P&L appropriation, drawings, interest on drawings, loss, all these things will appear in current account. Now the current account may have an opening balance in the question. Sometimes the opening balance may not be there in the question. Now if the opening balance is on the asset side, then we have to write balance brought down on the debit side. If the opening balance of current account is in the liability side, then we will write balance brought down on the credit side. Then salary, commission, interest on capital and profit as per profit and loss appropriation account will appear on the credit side of partners current account. Which means when you are preparing profit and loss appropriation account, the balancing figure, the profit, you have to write profit transferred to partners current account and not partners capital account. So if the question asks you to maintain fixed capital account method, then all the entries are passed through partners current accounts. Similarly on the debit side, drawings and interest on drawings, and if you are having loss as per P&L appropriation account, that loss will appear on the debit side. Now this is either or, both the balances will not appear, it is either or. Similarly, profit as well as loss will not appear, this is also either or. Similarly, the balancing figure, closing balance is also either or. Now, why is this method called fixed capital method? Because under this method, most of the times, the opening capital balance and the closing capital balance will remain the same, unless until a partner is introducing fresh capital or a partner is making permanent withdrawal. Introducing fresh capital and making permanent withdrawal will happen once in a while. It is very rare. So this method is called fixed capital method. The opening capital balance and the closing capital balance remains the same, and all the other items which results in fluctuating of the balances are shown in partners current account. So these are the two methods of maintaining partners capital account. The first one is fluctuating method, in which the opening capital balance and the closing capital balance fluctuates, changes every year because all the entries are passed through partners capital account. The second method is fixed capital method, in which the opening and closing balance remains the same as all the entries are passed through partners current accounts. And you have to make a difference between permanent withdrawal and drawings. When we talk about permanent withdrawal, the partner will not repay the amount to the firm. But when we talk about drawings, the partner is obligated to repay the drawings to the partnership firm. Okay, students? Now, I told that in practice actually capital account is prepared first and profit and loss appropriation account is prepared later. That can be seen even through the journal entries. See, these are the journal entries which you have already taken down in your notebooks. Now if you see these journal entries, the first thing is from net profit, the net profit is transferred to profit and loss appropriation account, or if it is a loss, the loss amount is transferred to profit and loss appropriation account. See the second entry, interest on capital account debit to partners capital account or current account. Capital account if it is fluctuating, current account if it is fixed. Next entry is P&L appropriation account to interest on capital. So first the interest on capital is transferred to partners capital account. Only then interest on capital account is closed by transferring it to P&L appropriation account. Like that you can see for interest on drawings. It is partners capital account debit to interest on drawings account. Capital account if it is fluctuating and current account if it is fixed. The second entry is closing interest on drawings account by transferring it to P&L appropriation account. So these are the journal entries which you have already written in your notebooks. The format of P&L appropriation account also you have prepared. The journal entries which you wrote is not just for P&L appropriation account, but it is also for partners capital or current account. Okay. Now I am in page number 71, NCERT book. Okay, do it yourself. Soumya and Bimal are partners. Now before going to the sum, I would like to make another point clear. If the question is silent as to which method you have to follow, then you should always follow fluctuating capital method. Okay, you have to follow fixed capital account only when the question mentions that the capital accounts are fixed, or if the question gives you current account balances somewhere in the question. If the question does not say that the capital accounts are fixed or current account balances are not given in the question, then you should always follow fluctuating capital method. Okay. Now coming to this question. Soumya and Bimal are partners in a firm sharing profits and losses in the ratio 3:2. The balance in their capital and account as on April 1st, 2019 were as under. So you are having current account here. What does it mean? It means the capital accounts are fixed. So this is the hint which you will get. And it is written credit. Credit means balance brought down will appear on the credit side. And capital accounts, they will not mention credit. In a fixed capital account, the capital balance will always have a credit balance. It's only in the fluctuating capital account that you may have a credit balance or a debit balance. Okay, so you have to prepare two accounts, capital accounts and current accounts. In capital accounts, two columns for debit side and two columns for credit side. You have to write Soumya Bimal, one in the debit side and one in the credit side. These two amounts will appear as balance brought down in the credit side of capital accounts. Similarly, you have to open current account with two amount columns in the debit side and two amount columns in the credit side, and it is balance brought down 1,80,000 credit side. Okay, these two balances will appear in the credit side. The partnership deed provides that Soumya is to be paid salary rupees 500 per month, whereas Bimal is to get a commission of rupees 40,000 for the year. Interest on capital is to be credited at 6% per annum. The drawings of Soumya and Bimal for the year were rupees 30,000 and rupees 10,000 respectively. The net profit of the firm before making these adjustments was rupees 2,49,000. Interest on Soumya's drawings was rupees 750 and Bimal's drawings rupees 250. Prepare P&L appropriation account, partners capital account and current account. So now we have to go about with the sum. So first we have to prepare profit and loss appropriation account. The profit amount 2,49,000 will appear in the credit side of profit and loss appropriation account. Interest on drawings will appear on the credit side of profit and loss appropriation account. Then what else you have? Bimal's commission 40,000 will appear on the debit side, and Soumya's salary 500 per month, which comes to 6,000. 500 into 12, 6,000. This will appear on these two, salary and commission will appear on the debit side of profit and loss appropriation account. Then you have interest on capital. Interest on capital will be charged on 3 lakhs and 2 lakhs. Since the capital accounts are fixed, the opening capital balance is equal to closing capital balance. Why am I saying this? Because interest on capital will always be calculated on the opening capital balance. So what if in the question closing capital balance is given? We will come to such sums later on. In my other videos, I will teach you how to calculate opening capital balance. As of now, you can directly calculate 3 lakhs into 6 by 100 and 2 lakhs into 6 by 100. This will appear on the debit side of profit and loss appropriation account. Find the profit, distribute among the partners in 3:2 ratio. Then you have to prepare partners capital account. In partners capital account, only the opening balance will come, and the same thing has to be shown as closing balance. Credit side, balance brought down 3 lakh 2 lakh. Debit side, balance carried down 3 lakhs 2 lakhs. Which means the profit which you distributed in 3:2 ratio should be transferred to partners current account. In P&L appropriation account, in the particulars column, you have to write profit transferred to partners current account. Now you have to open partners current account. On the credit side, 1,80,000 will appear. Then whatever you wrote on the debit side of P&L appropriation account, all those items will be transferred to partners current account credit side. It is X method, cross method. So what did you write on the debit side of P&L appropriation account? We wrote interest on capital, we wrote salary, we wrote commission, we wrote profit. So all these 4 items will be transferred to the credit side of partners current account. Since we have 2 amount columns, the particulars column is common. The amount column, for Soumya we will put the Soumya's amount, and for Bimal we will put Bimal's amount. Now whatever appeared on the credit side of P&L appropriation account, except the first item, profit 2,49,000. 2,49,000 will not come. But interest on drawings will be transferred to the debit side of partners current account. Immediately a bulb should glow. Madam, drawings will also come. So drawings will also be transferred to the debit side of partners current account. Find the balancing figure. Okay. I'll tell you the answer for this question. Profit and loss appropriation account, the profit amount is 1,74,000, and partners current account balance carry down is, for Soumya 1,97,700, for Bimal 1,91,600. Yes, question number 2, page number 72. Sonia, Charu and Smita started a partnership firm on April 1st, 2019. Okay, there are 3 partners, so you have to open 3 amount columns in the capital accounts. See, P&L appropriation account will have only 1 amount column on the debit side and 1 amount column on the credit side. It is the partners capital account which will have more than 1. Based on the number of partners, the number of amount columns will increase. So they started a firm with this capital, and the profit sharing ratio is 3:2:1. The partnership deed provides that Sonia is to be paid a salary of rupees 10,000 per month. So for 1 year it comes to 10,000 into 12, 1,20,000. And Charu a commission of 50,000 rupees. It also provides that interest on capital be allowed at 6% per annum. See, it is given 1st April 2019, isn't it? Which means it is opening capital balance. Directly you can calculate 6% on these balances, 5 lakh, 4 lakh and 3 lakh. The drawings for the year were 60,000, 40,000 and 20,000. And interest on drawings is 2,700, 1,800 and 900. The net profit is 3,56,600. Record the journal entries, prepare P&L appropriation account and show the capital accounts of the partners. So in this question, whether we have to follow fixed capital account or fluctuating capital account is not given. When the question is silent and when current account is not mentioned, it is fluctuating capital account. We will pass the journal entries later. First, you have to prepare profit and loss appropriation account. On the credit side, this 3,56,000 will come and interest on drawings will come. On the debit side, the salary, commission and interest on capital will come. Find the balancing figure, distribute among the partners in 3:2:1 ratio. Then you have to prepare partners capital account. On the credit side, balance brought down. These three balances will come. Then whatever you wrote on the debit side of profit and loss appropriation account, what did you write? Salary, commission and interest on capital. And profit, the final profit. These four items will be transferred to the credit side of the partner's capital account. Now coming to the debit side of partner's capital account, you have to show the drawings amount of the three partners. And then you have to transfer interest on drawings from profit and loss appropriation account to the debit side of partner's capital account. Find the balances of partner's capital account. Once it is over, the journal entries that you have to pass is very easy. How you have to pass the journal entries? The format, it is already mentioned in the format. The format where you have to prepare P&L appropriation account. See, it is mentioned here. Page number 68. There is no current account, there is only capital account. So you have to pass all these journal entries. The amount you will get it from the account which you have prepared. Okay, students? So try solving these two sums. If you have any doubts, you can get back to me.